All right, let's get started. So thank you, everybody, for coming. We have, my name is Fred Hsu, CEO, co-founder of D3. We're also launching Doma, the first blockchain for the domain name industry. I'm very excited today to have Arthur Hayes, CIO and co-founder of Maelstrom, one of our earliest advisors and investors over here. So Arthur, great having you back.
Thanks for having me.
Again.
Just yell.
So we had you at Bitcoin Vegas back in May, and it's great to have you over here. And we're here in Seoul. Seoul, during one of the most exciting crypto weeks over here. Quick question for you. The Korean temperature check. What do you think about Korea right now? The environment, energy, the hype.
I love it. I mean, all the restaurants are full. Everybody's rich, I hope. Seoul's fun. The food's good. I saw there was like some perp decks live stream party yesterday. Only in Korea, people just wilding out, trading, probably getting liquidated in perp dexes. So I think it's quite a great environment.
A lot of perp dexes from what I see these days. Cool. Number one, I wanted to ask a quick question. So hot takes on the market, Arthur. First of all, we're all pleased to hear you recently purchased or in the process of purchasing a Ferrari Testarossa with some of the hype token that you recently dumped. So what is your profit taking philosophy? Curious.
I always like to take profits. You don't get poor. You don't lose money taking profits. And obviously everyone's different. I run a fund. I'm more concerned about capital preservation than capital appreciation. And so, yeah, that is a more guiding principle. So I really am not trying to hit 100x returns given the size of trades that we put on. If I make 50%, I'm happy, right? So it's completely different in terms of absolute numbers versus some massive relative return. But obviously with big relative returns, you can also have 100% losses very easily.
My burning question is, what color Testarossa?
I haven't decided yet. So the dealer sent me the press release we're gonna get one of these. I'm like, oh yeah, cool, I want one. And he's like, well, they don't have the pricing yet, and you can't place an order yet, and whatever. So we'll see. We'll see what they offer.
Well, back to hype, and I'm not talking about hype here. I'm talking about the token hype, Hyperliquid. Quick question. So your Substack pieces have always been. Are you bullish? Well, first of all, are you bullish on hype? Hype's
yes.
Token. Okay, you're still bullish on Hyperliquid. Great. Your Substack pieces have always generated massive discussion. One recently on monetary regime change, the whole sort of shift from central banks trapped in the shift from traditional monetary policy. Can you kind of break it down for us over here in the Fiat Cafe?
I guess it's a great name because at the end of the day, my whole philosophy is on the creation of fiat currencies and the inevitability of central banks having to print money to satisfy political goals. And that's pretty much what every single one of my articles is usually about. And at the end, I post some nice big chart and some massive fucking number, and hopefully we get there. Maybe we don't. It doesn't really matter. And at the end of the day, as long as you get the direction correct and you survive, right? Don't use too much leverage if you don't have to, and then you don't get shaken out when something drops 20 or 30%, and you ride it.
And also one of my favorite topics, reading your Substack as well, stablecoin versus banks, right? And particularly any sort of east-west arbitrage. Any views there?
I think there's going to be a lot of political choices in terms of are governments going to allow their commercial banks to go bankrupt to allow stablecoin issuers to survive, right? I think there's an announcement today that Tether is doing a $500 billion, the valuation is $500 billion. They're raising $20 billion, and it's valuing them at a half a $1 trillion, which is I don't know if there's any, I don't know however many banks are even close to that zip code in terms of how much they're valued. And all they do is they take your money and they buy treasury bills, right? Because they don't have a back office and all this other stuff, and they use technology, and they have 100 employees. They're worth, a half $1 trillion. And I don't know what JP Morgan is worth. Probably have to pull it up on my Bloomberg, but I'm sure it's maybe closer, maybe not even that worth that much. So Tether might be valued at the most valuable financial services company, pure financial services company in the world, from a company that had the relevant New York and federal agencies in the U.S. trying to indict them for all sorts of nonsense, right? So it just goes to show that if you do the simple things in banking, like take people's money, send it from point A to point B, and don't do all the fucking bullshit that banks do, then you can be very profitable and valuable. And then the question is whether a politician is going to allow that to happen in, EU, China, relevant Korea, Japan, wherever.
You think they were going to buy Circle?
No.
All right, another couple of questions on digital asset treasuries. DATs, one of the hot topics going around. Again, DATs are corporations shifting to kind of crypto. We find that interesting, obviously. What do you think it means for traditional finance in general, the shift to DATs?
Fees. So I don't know. Maybe some of you guys have tried to launch your own DAT. I think the banker fees are in like the 5% zip code of the total amount raised. So it's a fee bonanza. So I'm assuming there's probably an MD, a VP, a few analysts at every single major bulge bracket investment bank, and they're all going out there pitching all these, sponsors saying, hey, we can, do a CB, we can do a ATM for you, we can do a rights issue, all the different standard corporate finance transactions, and we'll take a 5% clip. We'll, put you on a roadshow to all of our institutional clients and high net worth. And you raise $100 million or whatever, right? And so it's just the new IPO market for bankers, and that's why they love it, because it's just fees at the end of the day for them. They don't give a fuck about whether it's crypto or whatever it is.
So banks, you think they're going to be obsolete sooner? And if so, what do you think the timing and some of these signals will be in the market for that?
I don't know if they'll be obsoleted. That's a political decision. If a government wants to allow a private issuer to do the functions of a bank, like a tether, then why would you use JP Morgan or Citibank when you get 0%? Or you could stake a USDT and make, 4%, whatever it is. So again, it's a political decision. I don't know.
What about the institutional adoption, this cycle versus past? Any key things that you're seeing beyond the headlining numbers? Any other signals that you're seeing?
I think they like DATs, they like ETFs, all this sort of stuff. Yeah, I'm not super in the weeds on sort of the corporate finance stuff because, they're not the ones, bidding up Hyperliquid or Plasma. That was the hot thing today, right? That's not in the super degen shit where you make all the money. Equity trading is equity trading. It's fucking boring. I don't really do it.
Well, good segue to the next topic. We're going to talk about domains and RWA. RWAs, real-world assets for a lot of folks. Arthur, you've been very vocal about real-world assets, let's say, being the next big narrative, right? Whether that's treasuries or, in our case, internet domains. Why, Arthur, do you think you bet on D3 and Doma, you'd say? Of course, domains are, I'm not trying to, speak for you, but domains is an asset class. We're here to kind of educate the market. They are a potentially $1 trillion RWA, domain names like pepe.com or chat.com, headlining assets, but curious your take and your thesis behind supporting D3.
I think most RWAs are trash and most protocols are trash in the RWA space because, again, it's really hard to generate liquidity on some of these very long tail assets. But at least D3 and domains, we've had, 2-3 decades of product market fit. We know that people will spend millions of dollars on high value domains. You go on your GoDaddy or whoever, and you're already implicitly engaging in this market. It's just very opaque and hard to do it. And so why not put it on the blockchain, allow people to generate liquidity, allow you to trade it, and bring this into the light and make money on trading fees. So I think you guys are a little bit different than most others because it's already been proven that it works at an individual domain level versus oh yeah, I'm gonna split up an apartment in 20 pieces and give you liquidity, and then you can see your slice of this apartment on your your mobile phone. But then when you need to go and get a coffee or buy some food, and you try to sell that little piece, nobody's there to buy it.
Or dealing with municipal taxes on a physical property. You don't have that with domain names because, I think we talked about in Vegas, domains have always been digitally native to start off with, literally 35 plus years ago. Cool. So domains, of course, are a new DeFi primitive. You can speculate, you can borrow and lend against it. We're even doing things like creating fungible trading pairs around an asset like a hockey.com or like a chat.com type of name. Why now, you think? Why do you think the markets are ready now and potentially an explosive kind of environment for these new type of RWAs?
I think people are getting very used to trading everything. If it's something that you can put in a digital wrapper and trade it on your mobile phone, people want to trade it. And they're hardwired to say, oh, wow, my salary's not doing it for me. I need to speculate on something, whatever that is. And this will just be the next thing that people can speculate on.
Like Kalshi has trade the future, and we are trying to create, you can own and trade the internet. What do you think? 5-year vision, domains alongside BTC and Ethereum. Any predictors you think?
I think that's you, buddy. I don't know. I don't fucking know. You better be a big number because I need to make some money.
Better be big. Better be big. Promise. All right. We're gonna scout Sona. We're gonna hit that. We're gonna make you big. All right. Number 4, last one. Rapid fire questions. So AI tokens in 2025. Do you think they're bull or bear? Or do you have a jury's still out thought on that?
I think jury's still out. I don't really know what the hot new AI tokens. If I mean, virtuals was hot for a second, and all the Asian things, I think that kind of died down. I'm not really sure what the new narrative is.
And this is a little bit of a binary question, but crypto markets, $10 trillion crypto cap by 2030. What do you think?
I'll buy that.
The most overvalued narrative in crypto right now.
Stablecoins.
The most undervalued opportunity in crypto right now.
Undervalued.
What?
Domains.
Yeah, domains. There you go.
He said it, not me. And any last one, any bold 2025 prediction and headlines you'd say? And it's 3 months left, right?
Bold.
France leaves the euro.
Awesome. Well, we have a few minutes here. Are you open to take a couple questions from the audience? All right, I will hand over the mic.
Hi, Arthur. What do you think about Aster?
I mean, I think it exists. Whether or not, I don't know if it's backed by CZ or not, who knows. I think it's just another example of a low to zero free perpdex trading. And they'll probably issue some sort of airdrop, and will Hyperliquid be able to defend their moat and revenue stream against someone who charges much less? I don't know. That's what we're going to figure out.
Thank you.
Anybody else? Q&A.
Hey, Arthur. It seems like the pile of layer ones that raised a bunch of money have massive foundation funds, but don't seem to really have any path to reestablishing relevancy, is just growing and growing. What's going to happen to all of these layer ones? What should they do?
What should they do?
Yeah, they're sitting on some of these.
Buy tables at my parties. They're fucked. It doesn't matter. I don't care.
Let's keep it going. Come on, any other quick questions? Yep.
Hey Arthur, question for you. What do you think offshore jurisdictions, their role is in the wider crypto space? Offshore jurisdictions such as Singapore, the Cayman Islands.
Offshore from where, though?
Offshore just in general, like what?
Well, I mean, that's a vector. Where do you start from? Offshore from what?
Offshore for structuring.
Offshore from what?
From the U.S.
Okay. Okay. Now I have to.
onshore.
You have to establish that.
Yeah. Okay. Fair enough.
Yeah.
Fair enough. Yeah. So I'm just curious to know what your thoughts are. I'm from the Cayman Islands myself, and we have a lot of clients, particularly from the United States of America, and I'm just interested to learn what your thoughts are in terms of the crypto space. How important offshore financial jurisdictions, what role they play really in the crypto?
I mean, there's not really. I think it's a misnomer to call anything that uses the dollar offshore. I'm assuming that came in to sign the Common Reporting Standard.
Yeah.
Right. So you report anything that the DOJ asked you for. So what offshore? What are we talking about? Who gives a fuck?
You could do things there that wouldn't be allowed for you as a U.S. person.
Maybe.
Yeah.
Good luck with that. Depends on what it is in the political environment. So, I mean, I don't think it. If you want to say, how do we generate sort of tax revenue or business in these jurisdictions? Yeah, I guess it's I don't know, game of lawyer whack-a-mole, right? I don't fucking know. I'm not a lawyer, so I really think that's kind of the, whatever a lawyer is going to sign off on. Whatever you get those opinions and you feel comfortable with that, and ready to ride or die, cool. But otherwise, I don't think there is such a thing as offshore. If you use the dollar, you're dependent on the banking system of the United States, and your particular government, sits in the Caribbean, right? So, that's the U.S. government believes that they own the Caribbean, and so I mean, when that USS whatever the fuck shows up offshore, and they're like, well, give up X, Y, Z, here you go, buddy. So I don't know.
So unrelated, You spoke about cars earlier, fellow car enthusiasts. So which car is the one that you've enjoyed driving the most?
And honestly, I really don't give a fuck about cars. You can drive them 50 kilometers an hour max in Singapore. So you really can't even go that fast. I remember my first boss at Deutsche Bank, and he had a white Lamborghini, and we were in Hong Kong, and I'm like, whoa, dude, so like, where do you drive your car fast? He goes, what are you talking about? I didn't buy the car to drive it fast.
But you know what? It's there's a speed limit, but it doesn't say like how fast you can reach the speed limit. So that's one way.
And that's how you end up in a wall. So I don't know.
All right, one more question from the audience, please. Anybody?
Are you bullish? So I'm from the US, and I've felt that like in the last couple of years, leading up to this administration and now with it, a lot more crypto is just returning. Do you think that will continue into the administration, or do you think after kind of like Ponzi-nomics bull run?
When you say returning, what do you mean?
Literally just more people are there. So I guess like a lot of people were leaving, whether they were moving their headquarters or even kind of to his point, whether they just needed somewhere else to like get crypto investment. But now that's a lot more doable. Like, I don't know, I run a consulting firm and everything's just way easier for me. Off-ramping, like on-ramping, filing, just everything's a lot easier. So are you bullish, like more people kind of using the deep liquidity market of the US in crypto, or do you think it'll just stay global and no?
Well, I mean, I think what people are doing is they're accessing public markets, right? So they're doing equity stuff, debt market stuff, right? And obviously that was always going to be in the US because that's very liquid. I'm not involved in that sphere. You know, that's a different game. You know, everyone chooses their own game. That's not better or worse. So yeah, there'll be a lot more activity in the, you know, regulated traditional equity debt capital markets. There'll be something tangentially related to crypto, and that'll do well. I don't really see how there's going to be a lot of like hyper liquids coming out of the United States because the clients aren't there. Just numbers wise, they're over here in Asia and, you know, Southeast Asia, Latin America. That's where the people live.
Is it though, or is it like because can you just use like, do you actually believe that that's where most of the users are, or do you think it's like
Yes.
people with VPNs? Okay, cool.
All right, well, thank you, Arthur, for attending.
Thank you.
Great hanging out as always. Everybody, Arthur Hayes.
One of the co-founders here at D3, Chief Business Officer. Thanks for coming to our talk, and for those of you who were here earlier with Fred's interview with Arthur Hayes, you heard a little bit about why he backed us in our vision of DomainFi and being able to tokenize the internet's real estate, which is domain names. So I'm here to talk a little bit more about this $300 billion asset class. So a little background, domains have been the original RWA. We always view it as the OG NFT, right? They have been traded and sold in this fashion since 1998, really. A really great example is Sam Altman acquiring chat.com for OpenAI a few years back for over $15 million. Actually, one of our investors acquired this and sold it to him. So it just shows like how valuable these digital primitives are. And we have plenty more examples, like X.com being acquired by Elon Musk, another one of our investors selling that piece of internet real estate to him. Traditionally, the internet, it's worked. The distribution is great, but the processes are very slow, right? If any of you have ever bought and sold a domain name at a registrar, you'll know that it's pretty manual, right? It involves a lot of brokers. It's pretty opaque. The price discovery is not great, right? There's different perverse incentives. And not sure you can see, but on the top left here of the screen, or top right of the screen, you can actually see an email exchange between a broker representing the owner of another domain and actually my co-founder, Fred, the CEO. They contacted us about 12 months ago, or like earlier this year, and asked if we wanted to buy a three-letter .com, right? And it's just, you know, you're going back and forth between emails, man.
They kept charging me $1 million more every week. I kept corresponding with them. It's ridiculous.
Yes, and this literally happens for every single premium domain name, right? It's represented by a broker. They're trying to gauge how much you're willing to pay. and they ask you all these questions. And then on top of that, you don't even know, but the commission fees are egregious, right? If you sell a domain on GoDaddy, you're paying 20 to 30% in commission fees. So think about all those barriers to entry and all the processing time it takes. So it's pretty painful. ENS came out. It was great for the Web3 community. Everyone loved rallying around the concept of having a universal identity on the blockchain. But one thing, the important thing is that they actually didn't work on the internet, right? So the original vision and the promise of domain names was that they're universal. They work on any browser, any device on the internet. No SDK is needed, right? And ENS and a lot of the Web3 identifiers, they're great, but then tempted to do that. But they had a lot of challenges integrating with apps, right? They had to develop their own name resolution SDKs, right? And this is why you see a lot of the custom back-end integrations to support this, right? So how do we get the best of both worlds, right? You have the internet, over 360 million domain names in the world. The average .com resells for about $3,000 to $5,000 in the secondary markets. This is over $300 billion asset class. There's tons of premium supply. .coms, .ai names, .xyz, which is very popular in blockchain and Web3. And you have crypto, right? The Wild West. You have so many financialization primitives. You have all these DID applications that people are innovating that want to apply to the concept of a digital identity. You kind of in the middle between a centralized world and a decentralized world. Our goal is to financialize the domain market, right? We call this DomainFi. We have so many Web2 partners in the domain channel, right? We have registrars, we have registries that have integrated with us to unlock actual utility for these assets, right? On the flip side, we've actually assembled an amazing assortment of channel partners like Solana, Foundation, Avalanche, Coinbase, Sui. Obviously, we're Ethereum line chain as well. There's over 400 million active wallets in crypto. We know this, right? $10 trillion of volume. I don't even know what the actual total market cap is anymore with this week's volatility, but there's an immense amount of liquidity, right? And all this liquidity and capital in the Web3 markets is pretty turnkey, right? People want to speculate, people want to make money, people want to deploy that capital and generate yield. So at D3, our core vision is to accelerate the DomainFi economy. Number one, what we're doing, we're building bridges between Web 2 and Web 3. On the Web 2 side, you have access to the supply of premium inventory that has been held on the internet for over 20 to 30 years. We want to bridge that to Web 3. A lot of the retail users have never actually traded domain names at scale, right? Maybe you've bought one, tried to own a website, but the fun fact is that over half the domain names in the world are actually not used, right? People don't actually use them as a website. They just invest in these, similar to how you would acquire a real estate portfolio or a stock portfolio. So our goal is to provide standardized infrastructure for any developer, any application to syndicate these assets through our protocol. Domain names are actually our off-chain assets, right? They're custodied at registrars, so they require a degree of work and implementation to create kind of tokenization as a standard, and that's exactly what we're doing. We're very proud and grateful to have Paradigm, Coinbase, and Arthur Hayes, who was here earlier, as supporters, and there's a long backlog of investors who also support us. We announced this earlier this year, but Doma is our blockchain, the world's first blockchain to tokenize these assets at scale. We actually acquired Doma.xyz, ironically, from a broker, and that took six months. But we envision with the next round of TLD extensions coming up, 360 million domain names on the internet will grow quickly to 1 billion or even 2 billion, right? You think about Solana as a heavy community and a partner, Avalanche. A lot of these institutions and these layer ones are rapidly proliferating now, right? With even different on-ramps, stablecoins, DeFi, RWA, games, right? And even AI. So we think any person online should have a domain name, right? Domain names can store wallet addresses. They can, store ZK credentials, a lot of different things. Talked a little bit about this earlier, but essentially our goal is to bring new customers, is to unlock liquidity for this asset class, financialize and create more utility on this foundational primitive on the internet, and then obviously provide the Web 2 to Web 3 on-ramps, right? Anything you buy in a tokenized fashion, you can actually use on the internet, and you can trust it, and you don't need to verify that. So yesterday we announced Mizu, which is our launchpad for liquid domain investing. It's the world's first platform that you can fractionally invest in some of these premium assets. Right now we're in the process of onboarding some of the most highly valued .coms that you have never seen, right? Because these people bought these back in 2000 and they've been holding them for 10, 20, 30 years. Some of these domains include software.ai, which my co-founder Fred owns, right? Hockey.com, right? We have a lot of really interesting keywords that we're going to bring to market, and just as easily as you can trade Pepe or SPL token, the next meme coin that launches on Pump, our goal is to make it as easy to buy into these domains at scale. And importantly, ownership ties to real ownership rights at the DNS level. So if you end up buying out a domain, you can actually go to a registrar and claim that and use that, right? We have a lot of interesting innovation coming out, right? Around subdomain usage, right? Perhaps you buy 5 to 10% of ownership in a domain and you can get a subdomain. So if anyone wants to build AI tools for software, you can go buy a fractional share of Fred's domain and you can have that subdomain leased. We have great partners behind us. Solana, super aligned partner. We're developing a native GMP bridge rolling out in the next 30 days. Coinbase is an investor. We're rolling out a bridge on Base as well. Avalanche has been a huge supporter. We're partnering with all of these folks to launch native extensions in the next 12 months. So you'll see a .sol, you'll see a .base, you'll see a .avax. On the cultural side, we're partnered with a lot of these Web3 communities as well. ApeCoin was an early partner of ours. We're doing .ape. Anime by the Azuki team. We're launching .anime with their team. And we have a lot of infrastructure partners like Conduit, Celestia, Layer Zero that support a lot of this cross-chain bridging infrastructure. As a reminder, domain names are a global asset class, right? So our vision is to let the users decide where they want to own their assets. If you want to have it on Solana and you want to have a fungible liquidity pool on Meteora, Malcolm's team can help you do that. If you want to go to Aerodrome and have a pool there, our infrastructure will support that setup. So that's a little bit more about our vision. We want to work with the widest ecosystem of partners, both on Web 2 and Web 3. On the Web 2 side, we do a lot of events on the ICANN stuff. So if anyone wants to go to a ICANN conference, it's actually free and open and accessible. It happens once every quarter. We are the biggest proponents there. And on the Web 3 side, working closely with our partners at Solana and Base to make sure we have the biggest exposure. So thanks for hearing a little bit more about us. We're going to become a lot more vocal in the next 60 days, talking about a lot of the financialization that we're bringing to the market on these premium .coms, .ais, and eventually .sol, .base, .avax. Thank you. Do we have time for questions, Mark, or you have a different agenda? I have time for a few questions. If anyone wants to learn more about DomainFi, please ask. We're planning to launch a product. That's what I can say today. So yesterday we announced Mizu in the PR headline. So go to that first, and you can check out the leaderboards, and you'll see what we have cooking.
Check. Hi everyone. Hope you guys had lunch. Very good lunch already. And I'm Julie. I'm partnership manager at Varmeta, and today I'm here to show. To tell you guys about our journey building on Doma, because we are very honored to be the first Forge grant recipient. And I'm here to very happy to talk to you guys about our collaboration with Doma protocol and our journey building on Doma. And but let's first start with who we are. About Varmeta, basically we are a development firm based in Vietnam, and we have been building since 2020. We have been building for over 100 companies, and what sets us apart is our very deep expertise in digital assets. We have been building for global companies in real world asset, in crypto exchanges, and two of the major projects that we have built would be, the first one is KLDX, which is the very first regulated STO platform in Malaysia. And the second thing, the second one that we also supported is BitCup, which is I believe which is the biggest crypto exchange in Thailand. So with that said, and further from blockchain, we also do AI development, and we also partner with decentralized AI layer one like OG, who is also the sponsor of the main event this year. And so by working with them, we deliver scalable solutions that drive real changes to the ecosystem. And more about that, more about what I do specifically as a partnership manager. Like I said before, we have a strong presence in Vietnam, Thailand, and Malaysia. And this allows us to reach global partners with the local market. So when they're global partners, they aim to span their ecosystem in Asia, in APAC, or specifically even in Vietnam. We'll help them localize, build trust, and scale their ecosystem in Asia. And so about what we do, basically just blockchain development, AI models, and even AR, VR for metaverse apps also. But apart from that, let's focus on the main thing, which is what we built for Doma specifically. So everything started a few months ago when I met Fred, the CEO of D3 in Ho Chi Minh City. And we talked a bit, and then we chat about Doma protocol, about domain, the Web3 financial landscape of Doma, of domain. And we'll see that it can really unlock a huge liquidity market with, as far as I remember, like 362 million domains that they aim to tokenize. And with that, we see a very strong connection that we are also very strong expertise in digital asset also. So after that chat and after more chat between the tech guys, we, D3 chose us to become their very first Doma, the Forge Grant recipient. And the Forge Grant here would be the 1 million USDC fund launched since June 2025, just 3 years ago, that to support builders being on Doma and driving real solutions within the DomainFi landscape, let's say. And so we will talk more about the bot that we built. There will be a brief demo of the bot later on. And let me just introduce a bit about the bot for now. Okay, so what is the Doma domain bot? Very, very simply. So imagine the world of buying and selling domain names like coolwebsite.com, myname.eth, those domains. It could be a very fast race. Like every day, new domains come in. New domains, new ones get snapped very quickly. Prices go up and down, and other things are just becoming expired and become free, just very fast. And for that, traders and collectors have to be very, very fast to snap the best deal, the best bargain. But if you guys have to daily trying to check in manually, then it would take a lot of your time and effort. And that's where our bot comes in to give you, it will be the smart helper that watches everything happening in this domain world, which means it will collect all the information and bring the alert, bring the information back to your phone if you're using Telegram, or back to your feed if you're using Twitter. And the reason that we are using deploying the bot on these two platforms would be that, like in crypto, people are hanging a lot on Telegram and Twitter. So people would, and people have been chatting, sharing tips real time. So when we do this, we will make it easier for users to actually approach this the DomainFi, and that will make Doma protocol the user-first platform, and that's what we're trying to do. So a bit about the function. Let's talk briefly, very briefly about the function. So what do we care about when we do domain trading? We want first is to explore about a domain. Second, we want to track the prices, and three, we want the information in order to make decision. And for like, I think not just for domain trading, but any trading, information is power. And that's why we are trying to bring our user the very quickest information that just jump into you. You don't have to look for it, even look for it. So, so for let's quick walkthrough for discovery, of course, it helps you scan for new domains coming out. You can even set it to track for very, very specific domain ending, like .com, .eth, or even set it to track domains from certain protocol, certain foundation, like from base Ethereum. And for price tracking, you'll get instant updates on how much domain are listed for, and how prices go up and down, and what was the previous price until now, like the whole chart for that also. And for the domain info, where you get to know when a domain expires, so we can jump in before it's too late, or it will give sale highlights, like when one domain becomes just got sale for a very high price, you get highlights on the info on why is it just so you'll learn more about the market, so make a better decision later on. And the very special function that we want to introduce here also would be the whale watch, because not just domain but any trading, we're really eager to see those who are holding very big value in the wallet, what they are doing, because their action can actually have very big impact within the market, right? So we track their wallet, what they are buying, selling, holding, and we get to know about the patterns that allows us to make a better decision about that also. So that's very basic about what the bot is, the Doma bot is. And now we'll get to see a very brief demo from our tech lead who built this bot. Over to you, Hung.
Okay, thanks, Julie. So, hi everyone. My name is Hung. For now, I'm a blockchain leader for this project. So, today I want to show you our Doma domain bot in action. So, the bot is automatically find valuable domain and put them on X. It also can send personal notification to user on Telegram as well. Okay. In this demo, I will using for testnet environment, but the mainnet version with live domain data will be ready in the coming weeks. So the functionality you will see is exactly the same. I already prepared a video demo, so let's take a look. Okay, let me show you the Twitter bot account first. This is we are using the post event for latest tokenize and purchase domain. So you can see here there are some tweet posted before here from previous domain activity. Yes. And for now, I will show you this happening live using the actual Doma dashboard. In the portfolio, I already prepared some domain from D3, and they were tokenized for now and show up in my dashboard. I will try to list a domain such as Vietnamese food.ai. Yes. And you can see, you can choose a price, such as I choose 100. You can choose USDC or Ethereum, but I try to with Ethereum. When I list it, our bot will detect it, score it, and then it will post it to Twitter. But we need to wait, take a few seconds because the transaction needs to be confirmed on the blockchain, and our bot is watching the from the pool for new domain. So you can see the latest price, and for now we can back to the Twitter for checking. Now I will refresh the page. Yeah, so you can hear the Vietnamese food AI for now is already posted automatically by our bot. In this one, user can click on the link on tweet to so user can purchase or make an offer for this domain. So whenever user listed or purchased a domain on Doma marketplace, our bot will tweet an event on the Twitter. We also calculate score for each domain and will prioritize posting the domain with highest score first. Okay, that's how automatic posting work. But what if user want personal notification? So that's why where our Telegram bot comes in. So let me show you our Telegram bot. Okay, so let me start a conversation with the bot. Yeah, it shows welcome and so what I can do. I will try to show you the subscribe function. This is, I think, the main function for the Telegram bot. It is here. You can choose more conditions such as domain or TLD, but I want to focus on the specific domain. So I will input the domain here. I already list the Vietnamese food.ai before, so I will try to use it for testing. Yes, so you can see here, you can save it or back to add more condition. In this one, we are supporting the TLD. The TLD, we have the 6 TLD for now, but we add more later. And you can add more by event. Yes, or you can filter notification by price as well. But for now, I just want to get notification by specific domain. So I will to save the condition. Yeah, you can click on list subscription to see the domain you already subscription. Okay, now we can back to the Doma dashboard and try to make action. For now, I try to, because I already listed, so I will try to delete it to check the event. Okay. Yes, we need to wait a minute. I think just a few seconds because the blockchain needs to be confirmed. Okay, so when our bot sees the event from blockchain, it will post, it will put a notification on Telegram bot. So as you can see here, listing cancelled. And I think I will try to add more event by, I will list this domain again. I will try to with 1,000 USDC and list for sale. Yes. So when we list for sale, the notification will put on the Telegram and the Twitter as well. But let me back to the Telegram for checking first. Yes, so you can hear. We have domain Vietnamese food AI just been listed with 1K USDC. And user can click on the link to buy or make an offer. And in the Twitter, you can see here, our bot already tweet an event as well. And if you want to get more comment, you can click or help to, you can see here, we have more comment in this one, something like that, top wallet. You can see the top 5 active holding wallet by the bot, and top 5 royal wallet as well. In the future, we will try to add more feature in the bot, something like that. User can click on the wallet to check more portfolio, and another one, user can buy the domain or make an offer in the bot as well. Yes. So what we have today, first, our bot automatically posts the valuable domain on Twitter 24/7. User can subscribe on the Telegram with specific condition, and you can get notified about domain you actually want. But this is just beginning. We are planning to add more features, something like that. Discord bot for communication, and we will add more AI for scoring and prediction domain. And we also improving and expanding more platform and blockchain as well, because for now we just support for Ethereum, but in the future we will add more about the Solana as well, and maybe more blockchain as well. Yes, well, that's all for the demo. I think, yeah. Okay, I think that's all for the demo. Thanks everyone for listening. Okay.
Yeah, that's all for the bots that we said. That's all for the demo. And I just want to add very quickly that we, as the first grantee, we're very thankful for the team and for being very supportive first to get things out for now. And the team, we also got a lot more projects lining up, and we would love to see more builders building on Doma. And so if you want to build on Doma, hit up the first grant. Nishan and Mark will be very supportive upon that. And also, you can also discuss with us post session. We are always happy, open for any collab. So thank you, guys.
Yeah, that's why I grew hard, man. Can't you tell?
Yeah, you go hard.
Okay. Hey, good afternoon, everybody. This is a great crowd. Thank you so much, Doma D3, for hosting us and throwing such an amazing event. I think some of the conversations are really great. I love this intimate setting. I mean, it feels like you're having real conversations with people. So let's continue these conversations with our illustrious panel up here. Today we're going to be talking about the future of DeFi. My name is On. I'm the head of Superteam for the APAC region. So for those of you that don't know what Superteam is, we're ostensibly the community arm for the Solana Foundation. Our job is to go into different countries, right? We have about 15 different super teams in the APAC region. We have super teams in Japan, Korea, Singapore, Vietnam, Malaysia, Indonesia, and we have got a couple projects going on in places like Pakistan and even Thailand right now. But our job is to find great founders so they can build the next Meteora, so they can work with DoraHacks, and ostensibly, build the next D3, if you will, right? That's the goal for what we do. So let's get it started. I'd love for you guys to kind of introduce yourselves, but as you're introducing yourself, tell us one thing about your company, and then tell us like an opportunity in DeFi that everybody's kind of overlooking right now. I mean, the theme really is everybody here knows DeFi. Everybody knows, Meteora and the landscape. But what's missing? What's the hidden secret that everybody's overlooking in DeFi right now?
So I'm probably going to start. Thank you, Ann, for the intro. I'm Steve. I'm the Chief Strategy Officer at DoraHacks. I've been with the team for 8 years now. And what DoraHacks is that we are known as the go-to hackathon platform in the industry. We partner with really great new ecosystems like Doma and a lot of the other ones all the way since 2014 actually. So it's an 11-year-old company, and we're actually the host of the very first Solana hackathon back in 2020. And but also a lot of the new older ecosystems like Polygon, Avalanche, Flow, they actually all hosted their very first hackathon with DoraHacks. So definitely seen a lot of interesting DeFi hackathons in the past. And on An's question, the industry has been growing from, the cycle bottom where people are generally very bearish on what can be built till the 2019-2020 DeFi summer is where we actually have confidence in the industry again. Till right now, I think a lot of the people do think it's becoming more and more institutionalized. It's dominated by bigger protocols. So there's no opportunity for smaller grassroots hackers to actually build. But I actually came here today and I had a really excited conversation with Fred. I think the biggest opportunity actually lies within very specific assets that could be built with different DeFi protocols that you can actually build really, really cool infrastructure and tooling around really specific asset classes. So Fred actually introduced more about the opportunity of DomainFi, which is we're joining at the new the Doma protocol today, where it's a new asset class for you to trade, for you to fractionalize and collateralize and make it into a derivative on chain. Yeah. For you to trade, to lend, for you to borrow. So just different ways you can play around, and you can do that across different chains with different user interfaces, and to make it easier for users to access. So there's actually a lot of interesting opportunities to explore there.
Taking a Web 1.0 property and then making it Web 3.
Exactly.
Right? So that's the hidden message. That's the secret everyone's overlooking. I mean, that's a good one.
Yeah.
Hey guys, my name is Malcolm. I'm leading partnerships and BD for Meteora. So for those that don't know Meteora, we are a liquidity layer or a DEX on. So primarily, Meteora itself is broken down to two sides, right? One side is more on the tech infrastructure, basically building open source tech for people to permissionlessly launch their token in their desired fashion. On that side, we are working with about 25 different launchpad partners, beauty, banks, and beyond. Cumulatively, we've done about over 250 billion in spot trading volume since our inception. And the other side is more towards the LP tech itself, right? So people that are actually heading to Meteora, market making tail-end assets on their side, and kind of like making their fees from it. So one interesting thing that I think a lot of people are kind of like overlooking is more of like how LP is kind of like a sustainable yield strategy, and how people are actually like quitting their jobs to make money on top of Meteora, which is kind of crazy, right? Like on Meteora itself, you see that people enjoy LPing there, and you see a lot of tail-end assets just make their way to Meteora without any sort of financial incentives, right? A lot of the volume and TVL that people usually like pay for, advertise for, or extend themselves for, that's not happening on Meteora, and that just flows over. So I think that's kind of like testament to us, at least, is that like people enjoy using the product, people are making good fees out of it, and that's what is super underrated, among like meme coins, RWAs, and everything else. Like it's a lot of spot buy and hold, right? Because spot itself can be quite boring, to trade sometimes without the volatility. But like LP itself, gives you more avenue to have exposure and earn additional fees. And to what Steve kind of mentioned, right? Like I think it's super interesting because once assets are tokenized and liquid, it's just very interesting around like where it flows and what can happen. I think the speculation, the volatility, like it can go pretty crazy. Like B3 itself, I think is super interesting because like domains itself. My previous startup, we were called Solana.fm, and when we started, there was a buzz. We grew quite a fair bit, but like as we wanted to expand towards other ecosystem, .fm actually spiked in a lot of value, which is kind of irritating because we were trying to acquire the domain, right? So I think like even that itself could be a market. People can speculate. There's definitely like interest and volume to kind of go around, and I think that's like the heart of DeFi, where trading volume, volatility, and speculative assets kind of come together. So yeah.
Thanks, Malcolm. I'm Will. I lead partnerships at Caladan. We are a crypto trading firm and financial services provider. Been around for about 8 years now. Been active in DeFi for about 5. And the reason we got into DeFi was because the firm started from TradFi roots and saw opportunities in markets that were less well understood, more niche, starting in Korea, Japan, Taiwan, Turkey. The ones where it's just there's more gates to it and fewer people are able to access it. So our edge was figuring out how do we access that. So going from those niche sexes to then DeFi venues. Again, similar theme, right? To be able to access that. Even till this day, most aren't able to do it across the wider chain. Maybe for EVM, but what about beyond that? Even for Solana. Right? We found there's a lot of opportunity if we can build that capability. So, and over time, we've evolved from more prop trading to leveraging what we've built to help founders, investors, builders navigate crypto. On the DeFi side, we see so much opportunity to help founders launch products, make sure they're liquid. And that's something I spend most of my time on. So officially titled head of partnerships, but I think of it as more of head of client solutions. That's really the mindset here. I need to understand what your business is trying to do, and how do we leverage our ability to navigate crypto, DeFi, et cetera, to be able to make sure your business can scale, your product can get off the ground. So one of the things I think people are missing in DeFi is you're seeing a big trend in RWA. You're seeing a lot of people issuing assets on chain with the hope that there's all this capital that's going to come rushing in to buy it. And we're not seeing that. You're seeing a lot of issuances. Yes, there's a lot of money parked there on the primary level, but who's buying it? You hope institutions will. There's a reason why they're not, and people are not asking the right questions. Right? Why, if I had all the money, if I'm an institution, I have all this capital, I can access those assets off chain anyways. Now I understand there's potential 24/7 liquidity. There's some benefits here. That's relative to my other priorities is not as high. I care more about compliance. I care more about making sure that my investors they trust that if I put money here, it's safe. And right now for DeFi, well, the permissionless nature is a big no-no for large holders of capital. For individuals, perfect. I think that's great. But if you're really trying to go after institutional capital, you have to understand what is the pain point that they're struggling with. And oftentimes it's not sexy. It's like, my compliance officer does not understand how this protocol works, and therefore I can't, even though the yields are great, I can't put money into it. Right? So we spend a lot of our time trying to figure out how do we help them navigate this, Our roots are more from the TradFi side. I spent about a decade at GS building, like helping global investors access Asian markets because, again, the challenge here is about figuring out how to overcome these barriers. So I think if you spend more time there's a lot more opportunity for capital to flow through.
Correct. Okay, let's actually keep on going down that path. Like we don't have to talk about like differences in DeFi and Western versus Eastern, but I'd rather talk about the institutional stuff because that feels to me the most interesting piece of where new money's coming in, but are they buying, right? Because the argument can be made that BTC from 90 to like 120, that's institutional money. That's ETFs, that's DATs, that's the different laws being passed in the United States, and then those laws happening in Asia as well. So I guess my question for you guys is that what do institutions have to do to come into DeFi, right? Like you were just talking about, like, the institutions are here, they're looking at things, but what guarantees do they need? Do they need insurance? Do they need custody? Do they need to be able to know that their money is safe? Like
I feel like different, just like those who actually trade different asset classes are really, just like for them to onboard to a new asset class is actually tremendously hard and challenging. Those who actually trade stocks or like to trade crypto on Robinhood is actually pretty hard to convince them to even just download Coinbase and Binance and just like trade there.
Yeah.
And regardless, it's like bigger institutions who actually maneuver like billions of dollars, and to buy like a very, very small niche asset class in crypto, I feel like that's like tremendously hard. I think it's definitely helpful. Well, whatever the whole industry is doing right now of like institutionalizing crypto, where it's actually providing exposure for at least some of the major assets to get into the range of like all of those institutions who couldn't actually have access even to Bitcoin. And more recently, even the Solana spot ETF is not approved today. So there's still like a long way to go for the $1 billion to come in. But there's always, I think, a group of institutions within crypto that's actually pushing the frontier for us, who's educating the bigger institutions for us. But also, I think a lot of the local governments are picking up, which is helpful. I think the Vietnamese government is doing great. Singapore government is picking up.
You got a pro-crypto president here in Korea.
Yeah. So they're turning KRW into stable coins, and potentially there are more retail institutional exposure into crypto here. I think it would take years for them to actually get into DeFi properly.
Really? Years?
Yeah.
You don't think they'll move at the speed of crypto? Because the yields are great. It's just you need the tools at this point, right?
Exactly.
So, I mean, either A, that's an opportunity.
Yeah.
It feels like that's an opportunity for builders to kind of build great products like Caladan, right? But do you think it's years before institutions can, stake and loop? Or do you think they're just going to be boring and buy ETFs?
I think it's going to be pretty much, I don't know, years is like 5 to 10, 1 to 5 or what, but like, I think maybe 2 to 3, maybe, I don't know, very like optimistically speaking. But I think it's a lot on risk, it's a lot on familiarity, it's a lot on compliance. Like I could like be in a room full of DEX companies and just say like, dude, you can LP on Meteora, get additional yield. You can put a lending protocol, loop it, leverage loop it, and beyond, right? Like we could go all day. I could have like a specialist, right? Like Will on my right, to just tell you like, okay, here's how you can make money on chain and what's good for you. But they have to get comfortable with that idea. They probably won't be like frontiers there. They will probably like want a very, I don't know, rock solid kind of resume or portfolio of people that actually done it before them and get comfortable with that idea. Yeah, and I think so. And
okay.
yeah.
2 to 3. So you're optimistically 2 to 3.
I tend to agree with Malcolm. I'm on the more conservative end, so maybe closer to 3-4. But I think it's a fair range.
Wow.
Now, just to give you a reference point.
Okay.
So when a systematic trading firm, let's say a Citadel, they're usually at the frontier. They usually have the most comfort level on new tech. When Citadel wants to trade equities with a new bank, guess how long it takes for them to onboard this bank?
Oh, I'd imagine it's like a 6-month.
Yes, you're right.
Yeah.
6 to 12 months.
Just the DD, right?
Yeah, just the DD, just all of the evaluation of counterparty risk and making sure they're protected, et cetera, et cetera. It takes about 6 to 12 months. I think the hurdle is getting higher now because those compliance requirements are getting more and more strict. So you think about it, the most sophisticated firms with the most vanilla products takes 6 to 12 months in the traditional world. So imagine, a less sophisticated firm suddenly wants to start buying some tokenized asset, and they want to stake it on some DeFi protocol to earn extra yield. It's just, they don't even know where to start because the people that are there to evaluate the platform, well, they're not there, and they don't know where to go. There's not enough crypto talent, people that know the ins and outs of how a protocol works, how to evaluate counterparty risk, how does this mechanism even work, where does the yield come from? Like, there's very few that can explain it in terms that someone who's, if you think about it, someone sitting in a traditional firm, they're probably in their 40s and 50s if they're evaluating which platform to use. So just to give you that context, if equities is like that, crypto is very far from that. Yeah. So
I see a lot of GS guys coming into the industry today to kind of take that role that you've brought into the industry. And I think more and more of those guys are coming in, right?
Yes. I mean, to be very, very honest with you, it's been quite a challenging journey, because you think about it. Okay, let's say someone has a TradFi background. They have to also adapt to the new crypto, like the demands of crypto. To the tech is one thing. The other players in the space. What are the rules of engagement? Right? It's just culturally very different. Learning it, it's like I describe it as learning a new language. And the older you are, the harder it is to do. Right? And the risk appetite is also another thing. Right. So that transition is very hard. Right. We're starting to see, let's say, for example, the BlackRocks of the world are trying to source more crypto-native talent. But I imagine they're probably not going to hire someone from some new project. It's just usually the profiles are so different, right? And they hire someone who's very TradFi, that person wouldn't know anything or not know enough. So you have to find someone in between. Right? That it just doesn't. There's a very small amount.
It is. I know. It's interesting. We do a lot of hackathons, right? And I was talking to the guys at Alliance, right? And they really are looking for it. So it's not just product market fit, right? Product market fit, obviously, everybody understands that you have to have that. But it's also founder market fit. Founder market fit makes a huge, huge difference. And so a lot of the guys at like Alliance or even A16Z, to get into the program, they're looking for FANG or people coming from FANG companies, right? You know, the Facebooks, the NVIDIAs, the Goldman Sachs, the Netflixes, and trying to bring those people to bridge them into Web3. So it is a small subset, and those elite programs are looking for those folks. When you guys are running those programs, do you see a lot of people who run hackathons are trying to recruit from like these Web 2 industries?
Yeah, when we hosted hackathons back in 2018, we actually already see engineers from like IBM and Google like joining those hackathons on the weekend. This is particularly true, still happening in San Francisco today, where the Doma team is actually from. There's 10 hackathons happening in the city every day, every weekend, and it's actually those engineers just joining those hackathons. But I would say it's like a good hybrid of like grassroots developers, and we call it the cathedral and the bazaar. So the cathedral is, I worked at Citadel and now I raised $100 million to build the next monad. Yeah. And the bazaar is, we came out from the Doma hackathon and we're raising a 50K C round, fresh out of college, not even graduated, but we probably want to build this into a $1 trillion protocol. Right. Either way could work. So, but definitely, if you're more institutional facing, then it's definitely helpful when you have the expertise and you have the relationships.
Right, for sure. Okay, let's move the topic a little bit to innovations. I really want to talk about, and we've been talking a little bit about what's your secret for DeFi, but what are the innovations that you see short term that is driving either adoption, use cases, or Malcolm, why don't we start with you on that?
Yeah, for sure. Okay. Yeah, I think for our end itself, for DeFi, we use our previous programs were all closed source, and since we made the transition to open source everything, heavily audited by ZLA, Autosec, and a bunch of the top auditing firms in Solana, people have like better trust with what Meteora builds and the mechanisms that we do have. I think around DeFi innovations, there's one in particular that's pretty interesting that we are pioneering. So a lot of projects are actually looking to use airdrop as a mechanism to engage their users and reward their stakeholders respectively, right? But we all know in this room that like airdrops, you go to like anyone within 5 minutes, price action isn't good, chart looks bad, and it dumps. People just dumps, and that's pretty much historically what has always happened. So I think using our tech itself, we are actually pioneering new ways to distribute airdrops in a very meaningful way. Bandwagoning of like how we want to do like LPing as an industry, or LPing to empower people to like quit their jobs, make this a full-time thing and beyond, or just make the money. Is that like what you can do is you receive your airdrop in a LP position in the form of an NFT, and you can opt for it, and with that NFT itself, you're actually earning fees off that position. So users have the choice to basically decide like, okay, I can see the fees coming in. Is this something high volume? Is this something gonna make me money? What's more positive if I dump it right now, or if I hold this NFT, earn the fees, and reduce our pressure and beyond, right? So that's one I'm pretty excited for. I think that's pretty high in demand because
make airdrops great again.
Yeah, exactly, right? Like make it meaningful, build like meaningful chart, engage your users in a meaningful way, earn good fees, and it's all about positive experiences. If you get one crazy airdrop, quote unquote hype, right? That stuff is crazy. Like that's gonna like set such a positive experience, and you are inclined to whatever they say, they do, or the innovations that they push. I think that's not just for Meteora, but people using our products as well. We want to engage in a meaningful way. So I think like that's one of our innovations where we align different sort of stakeholders, from participants, to the devs, to the project as well. And we are continuing to pioneer stuff like this to innovate. Even I don't know what that looks like on the compliance side, right? Because that one's hard because permissionless. But we're thinking about that as well. Yeah.
All right. So moving away from the compliance theme.
Okay.
I think
innovations. Innovations that you're excited about.
What gets me really excited, we're starting to see products in DeFi that actually solve meaningful problems, whether it be an institution or at a retail level. So DeFi LP, it's been around for a long time. Right? What are the biggest struggles around doing that? Impermanent loss.
Yeah.
Most people just won't deal with it. The yield could be high, but how am I supposed to be able to manage the impermanent loss? Now, we do this for foundations, for large capital holders that want to increase liquidity on DeFi. We actively manage it for them. We've built the system to do that. But that's at an institutional level. What about for the everyday person? We're starting to see tools that abstract away that interface. You could be using an AI agent. You could be using a vault. Either way, you've removed that need or that complexity of managing the impermanent loss and just give them the yield. That enables a whole group of new users that previously just weren't comfortable to come in. I think that's great. Another one I'm really excited about is we're starting to see more TradFi primitives coming into crypto. So I'll use the example of Boros. You guys are familiar with it. Pendle just launched their Boros interest rate swap market about a month and a half ago. Full disclosure, we are the primary market maker for that, but I'm not plugging it for that. I'm not talking about it for that reason.
Chill. Don't worry about it.
The reason I got involved is because one of the team, Tian, Vu, they're great people, but that product, it's the same ethos. So they came with this, the same ethos they applied when they first launched the original V2 product. It is solving a real need. It's effectively swapping floating versus fixed. Previously, it was airdrop rewards. Now it's the funding rate. Perps are the most widely used product in crypto. But you're all exposed to the same funding rate risk, which cannot be hedged out. And that limits your ability to, well, get exposure to a certain position. Like, whether you're retail or institutions, I think it is a problem that no one has been able to really solve. Boros effectively creates a market that enables you to, well, if I am long the BTC perp right now, I'm exposed to the daily funding rate risk, it'll move around on Binance, I can then pay a fixed rate to swap out that volatility. Like, so it's very clean to me. I know over the next 3 months plus what my interest rate will be. It's super valuable because then it allows me to scale up a trade. That can be applied to institutional products. So that's something that I think I don't think it's talked about enough, frankly. It sounds I don't know if it's not sexy, but
No. We're talking like hundreds of billions, right?
yeah, I think the opportunity there, and we're just starting off with like BTC and ETH, which are on the more stable end. But if you can scale that up to more, well, that's just across the majors. It just enables a lot more people to get involved. So, yeah.
Okay. So two things from you. It's basically how to make the interface ostensibly easier, and then
more like these TradFi primitives.
And these TradFi primitives. What about you, Steve?
Yeah, like back to my first point, I always think the most interesting thing are you can digitalize anything right now. So some of the interesting incubations that we saw in the past year is you can put your time on chain.
Yeah, time.fun.
Yes. You can just trade collectibles like Pokemon cards.
Digitals.
Yeah, and essentially, like, why I'm excited about partnering with Doma is they're actually the first team to do this, to put domains on chains, like to fix the pain of, like, nobody knows how the domain market works other than people working in this industry. Or there's a guy in the Chinese market that's just like, we all know this is the domain guy, and you go to this guy to buy domains, and he's selling you domains every day, but that's it. He's on WeChat. But there's no proper market for it, and it's just so very interesting that crypto offer access for anyone to trade anything, anytime.
Right.
Yeah, I think that's the most exciting thing. It's like one big exchange that you can actually trade anything, and prediction markets you can actually trade on the results of like future incidents, and like huge decisions have to be made by the whole government, country, and what's the weather like tomorrow. So anything is like tradable today. I think that's the beauty of crypto, and I think this
24/7, right?
Yeah, it's 24/7. Yeah, which is bad for traders, but it's
bad for sleep, right? But totally said. You can ostensibly tokenize anything in today's market.
Yeah.
I do want to bring up one interesting thing that probably some people have been talking about for some time, which is AI agents, right? What do AI agents play? Do they truly play a role in DeFi today? We've been hearing people talk about it. Malcolm, just like, what is the most interesting AI agent you've seen in DeFi, and does it help solve for the problems that like making it less complex? Bringing more TradFi people in. So let's just, great examples of AI agents that you think are innovating DeFi itself.
Yeah, for sure. I think to top up Steve's point a bit, like everything can be tokenized, and it's a crazy market there, from time to celebrities and beyond. So yeah, just tokenize everything. But yeah, I think on the AI tooling side of things, I think Meteora itself, we need to do a better job of like making LPing easier or like clearer for people to make like proper decisions. I think like properly sort of market making, I'm sure Will knows there's a lot of intricacies and complexities along the way as well. On the degen side of things, there's, I guess, like its own sort of way to like market make, and people have made good fees. There was literally one user that I saw on Twitter that ran from 1 SOL to like 82K sort of like in fees. I have no idea how, but that was done. That was for the Pham launch, so super high volatility event, and that was able to happen, right? But yeah, I think for AI agents itself, there's this one particular project called Unify. So what they do is actually extract a lot of all these complex LP strategies on top of Meteora, specifically the development tech itself, knowing what kind of assets they are market making for, the ranges that they are setting, the fee structure and beyond. and actually exclude a lot of the complexities, right? So you put a queue, you put a ticker inside and say like, how can I profitably sort of like set my position for a particular token at that time, and they actually churn it out for you and they can open the position for you. So I think in terms of AI tooling, that's one that I can really think of right now. There are a couple, right, where they have like some cross steps of interface. If you are looking for you, which is what many people are looking for, Meteora is one avenue, Troopland, and the others, money markets, people are looking to kind of maximize their money on chain. So AI tooling in that aspect where people have some sort of smart allocation around where money should be put to maximize yield, that's like another way to go about it. Honestly, still very new, super retail facing, and I still think it's quite complex. Like I feel like if you could strip it down for like a consumer app, really easy, like 3 options or like very personalized. Like before you sign up for that, there's like a personalized quiz of like what your risk appetite is and beyond, right? You get something really tailored for you, for your appetite, and it's liquid, So that could be interesting.
All right, Steve.
Yeah.
Sorry.
Well, thanks, Don. Actually, Malcolm, could you repeat that AI agent platform? Unify. So, guys, Unify is aligned with Meteora, it's in Jupiter. So that gives me a big vote of confidence. I mentioned this because there are a lot of AI agents platforms out there. Sure. It's like asking the question of in outside of crypto, where does AI touch? Essentially, it's pretty much everywhere. What we found is crypto tends to ride on these broader trends, and then it accelerates it. Everyone comes in and tries to launch their own copycat. Yeah. That is a huge problem in this industry. Yes. But what I think really matters at the end of the day is, are you aligned with a partner that understands the end consumer? And I want to highlight the Meteora and Jupiter team, because at the end of the day, you build great products. Why do you build great products? Is because you understand what your customer wants. You said abstract away simplify the thing. Yeah. Like it doesn't need to have that many bells and whistles. You just make it hard for your person to use the thing. Yeah. Right. So I think a competitive product, whether it be an AI agents or what have you, has to align with a team that understands the end customer, and then can advise that team to tailor the product and integrate it. There's so many tech products in crypto. There are not that many, how do you put it, consumer-aligned or client-aligned, customer-aligned protocols. Right? Crypto tends to think, if I build the tech, people want it, whereas at the end of the day, it's really about, well, if I understand this market and I build what they need and remove the most pain points, that's what's going to win. That's right. So a recommendation for any builders out there, particularly on the AI agent side.
Chase pain. Yeah.
Chase pain and work with the people. You built this product probably because you're more technically inclined. Yeah. Right? You have great tech. But you need to make sure you also, the other piece of the puzzle, you align with a team, you have a partner. It could be a co-founder, or it could be, a broader platform like Jupiter and Meteora. You get their advice on what it is that people want and integrate. I think that is the winning strategy. In absence of that, everyone's trying to create their own market, and it's just not possible. Yeah.
Right. There are probably more agentic tokens than there are legit products.
Yeah, exactly.
Right?
I also think that the teams that have established themselves as the ones that understand customers, they are the ones that have authority. They are the ones, they have all this experience. They've built up this reputation. And once you've gotten to a certain point, you have a reputation to protect. So the Jupiter team would never back a product that doesn't align with its customers, that could potentially hurt its reputation, right? Not trying to plug you. I honestly, but I think it's just not said enough that the product's important, but what gets the next amount of people to come in and put money on this is the safety. Yeah. And it's based on trust with a platform, with a brand, with a team that you know.
100%. You want anything to add? If not, please go ahead if you want to add. Otherwise, we'll go to the last question, which is...
Let's do it.
Okay, so last question for you guys is, we talked about things that might be 3, 4, 5 years out. What about 2026? What can you do for me today, right? So, I mean, I think the audience wants to know, what's your bold prediction for next year in the DeFi category? Steve?
Yeah, I just really want, all of the builders to have opportunities to do well. So, I have this feeling that that the whole space is becoming more and more institutionalized. All of the big boys are coming, so seems that there's not a lot of opportunities for like grassroots builders as before. But actually, like Uniswap started from hackathon, and in 1inch actually came out from a hackathon.
That's right.
So I still believe that just by talking to Fred today makes me super excited that I don't think people understand Doma well enough to know what to be built. This is why I actually invited Fred to do an interview with me so that we can introduce Doma to the Dora developer community. That there's so much you can do around just like domain itself with the Doma team. They actually know what to be built, and they want to welcome developers to try them. So I really want to actively find out those like grassroots opportunities, because I don't have to worry about those like big enterprises like getting into crypto. There's already teams working on that, but there's actually a lot of like really cool startup opportunities out there in DeFi specifically, but also in crypto in general. And we really want to work hard to make sure that we're bridging the resources to make sure that happens.
Go deeper on the opportunities that are in front of us.
Exactly.
Yeah. Okay, I like that.
Yeah, I think 2026, tokenize small things really. It's really interesting because the tech itself is super simple. Create a bonding curve, X amount of supply, split fees and beyond, right? Very sort of simple logistical arrangements, but through that itself, you see sort of like new metas, verticals, and categories being formed. They are launched.
I'm going to stop you there. What categories? That's what they want to hear.
Yeah.
I mean, we got Doma, we got domain, but what is the next category? Make a bold prediction today.
Wow, you're putting me on the spot.
That's right. That's right. This is a tough interview.
Wow. I think athletes tokenizing themselves and themselves on chain is really attractive.
Okay.
Yeah, like I think domains are definitely hot, don't get me wrong, but I think athletes themselves and especially like boxers, anything towards like the media side that is very attention driven, there is a case for them, right? Because a lot of these fighters and athletes, they are fighting for like they're in their prime for only so long, right? A lot of them, they want to earn money. A lot of them start their own alcohol company and beyond. Serious, like look at McGregor, look at Mayweather. Yeah, exactly. They diversify a lot. So like I feel like a lot of them, if they have their own legit branding, there's their own tokens, and to figure things out properly, of course, right? It's something super crazy that can happen, and it helps a lot for them. Tokenize more stuff, make it fair launch, and I think Meteora is the place to do it, and we will forever support that song.
I like the prediction. That's a bold prediction. Athletes tokenizing products, more tokenization, but athletes. All right.
Yeah. I mean, it's really hard to follow that one, man.
Bold. We want bold.
I'm really excited for that one.
We want somebody tweeting this right after this, saying like, "Watch out for tokenized athletes."
Well, two things. One, I think you're going to see, you're already starting to see it, but very meaningful consolidation. Right now, there are still too many chains trying to launch, the next tokenized asset or whatever, or the next AI agent. I think it's part of any relatively young market, especially if it's easy to enter. Yeah. But at the end of the day, I look at every chain as it's a city or a country.
Correct.
In the beginning, you're competing for talent. At some point, a few of them will collect enough talent, and it becomes very obvious that you should go there instead of this new one. Now, what does that imply? Once you have consolidation, then you go beyond the initial early stage sort of metrics. Everyone's trying to do TVL. Everyone's trying to you're trying to up the liquidity on a pool, but but there isn't that many things above that, right? Yeah. You need to move to that next stage. Otherwise, the city will not sustain itself. Correct. Right? So on the RWA side, on broader tokenization, well, I think that will continue, but then it is asset issuance side right now. The next step, once you have this consolidation, it's like one of these cities is going to realize, okay, in order for institutions to come in, I need to remove these barriers to entry. And one of the first things that I think you need to do is insurance, which you mentioned earlier. No, it's not sexy, but I think it's crucial because right now, I'm really excited.
The FDIC of crypto.
Right.
You know?
I'm very excited for a lot of these emerging market tokenization projects. Where there's one, it's a great team. It's called Spice. They are tokenizing trade finance for like if you are buying cinnamon in India and you're going to sell it to Australia over 3 months, like. That's very classic trade. You earn 15+% on this thing. Problem is, you can't access large institutional capital because it's a very niche thing. Like there's a lot of due diligence, there's a lot of counterparty risk. Ultimately, it's counterparty risk. One of the things that you can that addresses that barrier is an insurance product backed by assets on chain. There's a lot of idle assets on chain that can be used for insurance. They will then that mitigates the counterparty risk and enables large capital holders to say that's a great trade. I'm going to put this in, right? I think that and
collateralize and take LTV off of this.
Yeah, exactly. Yeah. So like it opens up yield for all of these idle assets like Bitcoin, right? So, it also enables all of these innovative entrepreneurs who see sources of yield, but because it's so hard to get people to understand the underlying and feel safe. Like this insurance layer is a huge opportunity. Right? It's still very early days. You see insurance for like hacks, but you don't see much more than that. You see DPEG risk insurance, but you don't see much more than that. I think that has to come out. It will probably be in one of the main chains. I'm sure you can think of. I'm really waiting for that to happen, and then I think tokenization will really take off.
Yeah. Oh, I love that. That's great. I was just having a conversation with a buddy of mine who was basically working in the financial industry back in 2008, and he was like, how do I bring CDOs or CLOs into crypto and basically ensure these like really like risk deals, but like that they have the risk appetite for that. So those are a lot of very, very interesting innovations. This was an amazing conversation. Thank you so much, guys. Please give it up for our speakers up here.
Thanks so much. Thank you, guys.
Thank you.